Hi there, good afternoon. Welcome back to Eating. Now you're watching Markets at Noon with me, Kanishka Sarkar and Ankita Saxena. Well, time now to focus on one of the stocks that is in focus today, that is Stovecraft. Now, the company has reported a good set of numbers, very strong performance as far as the margin expansion is concerned, healthy profit and revenue growth as well. But what are going to be the key growth drivers in the second half of the fiscal? To understand all that and the outlook going forward, we are now joined by Rajendra Gandhi, the managing director at the company. Hi, Mr. Gandhi. Thank you so much for joining us today. Very good afternoon. Well, first up, let's talk about your financials. Now, the second quarter saw healthy revenue and PAT growth, but margins expanded only modestly. So, if you could give us an outlook on profitability for the second half of this fiscal.
Yeah, good afternoon. Thank you. First of all, we continue to grow, and post-festive Diwali season, relative sales momentum is very good. So we believe we'll continue to grow at the pace that we are growing. And with the operational leverage setting in, as our revenues grow, the contribution to our PAT will be much better than our growth rate. So our margin growth and PAT growth will be definitely better than our revenue growth. The levers are, of course, we are working on our gross margins itself. That is one lever. And the second is the operational leverage. Both of these will help us both to improve our EBITDA percentage and our PAT percentage.
Right, Mr. Gandhi, hi, this is Ankita also joining in. Your gas cooktops and small appliances have showed strong double-digit growth, but the non-stick cookware volumes have fallen 7%. What's driving this weakness, and when do we expect a rebound or a recovery?
Now, let me explain to you. This category is the category of cookware. We are now getting into a full stack of cookware, including our cast iron cookware. So by volume, by absolute numbers, it may look like that because the ASPs of these new cookware that we are launching is higher than the products that we were already making. Of course, there has been a little slowdown on the pure non-stick category. We have a new range of various categories of cookware adding to this category. And on revenue, we continue to grow on the cookware. We'll have better growth going forward with new categories adding. Because of the higher ASPs, the unit numbers may look smaller. Otherwise, we continue to grow on the non-stick cookware also.
Right, Mr. Gandhi, just with the cookers and induction cooktops, they have been showing steady volume growth, right? So are you seeing any structural shift in consumer preferences towards these product categories?
Overall, actually, if you see of the 13.5% growth of our revenue, about 3.5% is coming from value. That is either input cost increase or our margin, realization going up. But otherwise, all the remaining growth, if you will actually want to get a sense of the growth, 10% is coming by volume. And the remaining about 3.5% is coming because of increased cost or increase in the ASPs. So though the different numbers may look different because of different ASP value products in the same category. Sometimes we have appliances of higher value selling more, and so the numbers may look different. But otherwise, we are seeing on an average across the categories between 8 to 10% growth on volume, and that demand continues. When I say demand continues post Diwali, generally there is a softer sales momentum, but we are seeing good momentum relative to the post-Diwali sales. So we believe all the initiatives that are happening what the country is going through, or domestic demand, we believe is going to be strong. We are witnessing this at the moment. So that is showing in the consumption of whether it is pressure cooker or induction cooktop or the appliances that we make, including the cookware.
Right, Mr. Gandhi, you've also added 16 stores this quarter, taking the total to 296 across 21 cities. How confident are you of hitting the 500 Pigeon exclusive brand outlets and target by, say, FY27?
So we do about 25, 30 stores every quarter. And we are actually crossed the 300 number. This is for the number that you have is for the last quarter. And we believe we'll be able to do at the same pace. And we'll be able to hit that 500 stores but maybe if not the end of FY27, but definitely in the year 27. But our endeavor is to do it by FY27. and we are very confident at the current run rate that we are able to open up stores. And also it is a very positive contribution to our companies, both in terms of brand exposure and for our revenue. So we are very confident by 27 we are able to get to that 500 number.
So hopeful of that for FY27. But Mr. Gandhi, how has the festive demand shaped up this time around? Are tier 2 and 3 cities also continuing to outperform metros in terms of volume?
We are not able to quantify separately the tier 2, tier 3 in our business, but of course we are more relatively rural brand, and also we have a good distribution network in various channels that we operate in the rural markets. The festive demand was good. There was a little slowdown in purchasing between the announcement of the reduction in GST and the actual implementation of that for some about 10 days. But we have been seeing good demand during the festive season. And generally, there is a slowdown immediately after the festival, particularly Diwali. But I think there is good momentum even in the sales post-Diwali.
Right, Mr. Gandhi, what share of future growth will come from an exclusive stores versus online and general trade channels?
Our general trade, of course, was flat in the previous quarter. We have grown in the preceding quarter, the quarter gone by. And our higher growth for the domestic business is coming from e-commerce channels, followed by the modern trade channels. Of course, on a lower base, there is very high growth from our own EBOs, the retail outlets that we have. And the last in the line is the general trade. So general trade continues to be a little flattish, but the contribution from our own retail, once we cross the 500 number, we will be in the contribution itself from this one channel will be between 15 to 20% of our revenue. We are growing at 80-90% on revenue only in the retail channel itself.
All right. Thank you, Mr. Gandhi, for that outlook and sharing that update with us. But on that note, we'll let you go.